Well, let's get to our closing bell exchange today. On the day, the Dow's up about 80 points. We have David Waddell of Waddell & Associates, CNBC contributor Peter Costa of Empire Executions, and BTIG Managing Director Holly Liss from the CME out in Chicago. David, if we could start with you, kind of a noisy start to things in terms of M&A and all the rest, but kind of a general reaction in the market. You have earnings coming in, I guess, roughly as expected, rates kind of sitting where they are. What's actually capturing your attention right now as the market sits here?
I'm paying attention to inflation, actually. I think we've seen a change in direction. I think inflation is starting to arise around the planet in a good way, in a very healthy way. And I think that with inflation ticking higher, that'll be good cover for the Fed to raise interest rates in December, which would be good for the financials. I think if we have more inflation, we have more nominal GDP, more pricing power, better operating margins, and better earnings as we go into next year. So I'm actually pretty bullish as we get past this election, which may be a foregone conclusion anyway. And I think you're picking up some of the animal spirits surrounding that view with the merger mania we're seeing today.
Mr. Costa, what are you watching in the market?
Well, I have to say that I wasn't really thinking about inflation that much, but now, after listening to David's point, I kind of agree. But I think that what we're seeing, and this is a good thing, you are starting to see companies put money to work in mergers and acquisitions, and I think that's a better strategy than buying back shares. Now, as a broker on the trading floor, you say, well, everyone loves a buyback, but actually, I don't. I think it's a waste of money. But if companies will go out, seek partners, or seek, trying to eliminate some of the competition. Granted, that's not what America stands for, but the reality is, if you want to build your company and you want to grow your company, there's only really two strong ways to do it. It's either merge with somebody or buy somebody, or spend more money on research and development. And we're not seeing the R&D money being spent, but we are seeing them spend money on, buying competitors, or at least buying parts of competitors.
And a lot of that money that they're spending is in the form of cheap debt, of course. So, yes. Holly, when you hear this talk of maybe some inflation expectations kindling higher, also there are a lot of reports that the markets are basically telling governments around the world, do some more fiscal spending, and yet we have the fixed income complex out there really relatively sticking in its range. We're not seeing yields balloon higher. What's your read on how that market is set up right now?
You're right, Mike. We haven't really seen the inflation, and unlike David and Peter, I'm not really paying attention to that much here, because I don't think it's a concern for the Fed at this point. We are seeing yields in a range-bound market here. However, they are tending to drift a bit higher. We're seeing that today, and I think that could continue up till about 1.9% in 10-year space. But if you look at the inflation numbers that the Fed likes to look at, such as the PCE, which will be out a week from today, it hasn't been above 2%, I believe, since 2012, and even then it was just a small spike. So I don't think inflation is their concern. I think what's going to be more on their radar is labor, that they really haven't seen it pick up as much as they'd like. If you look at where it was a year ago now, the unemployment rate is at the same point where it was a year ago when they raised rates. And if you look at non-farm payroll numbers, they're actually declining year over year. In 2014, I believe they were 250 on average a month. Last year, I think 2.25. And this year so far, we're below 180. And I think that's going to be more of a concern for them than the inflation numbers. Even if you look at the CRB index, it's languishing. You could call it a dead cat bounce. It's going nowhere.
So, David, going back to your point, I'm also thinking about when we typically see these mega deals, it's kind of like the skyscraper index, right? They don't happen at the beginning of a cycle. They tend to happen at the later stages. Does that all kind of fit with what you're talking about? And what does it mean for all of these companies financing these buyouts with incredibly cheap debt?
Well, I think, first of all, if we're in the later stage of the cycle, which I think we are, which may be the last quarter of this bull market, that'd be awesome, because what happens in the later stage is you get to the euphoria moment, which clearly we haven't seen. So I would be very happy. I mean, I'm hearkening back to the last cycle, and I know that's not something we all want to talk about, but you go back to the crazy mergers in 05, the market didn't peak until late 07. So I think this could be the beginning of the end, but in Dow theory, you want to be in the market mostly in the first quartile and in the last quartile of the advance. So I'd love to see animal spirits, and we're not seeing it on the IPO side. So I don't think it's ubiquitous throughout the market. I think you're just now seeing, as Peter said, people kind of grasping for growth. And just real quickly on the Fed, Bullard came out today and said, we'll raise rates once, which is December for face-saving purposes, and then sit on the sidelines You know, I hope that becomes the default view, but I think that would reconcile with your last commentator's comments.
And Peter, you know, just in terms of this lack of exuberance, it might be an understatement. We've had this market kind of sitting here in this narrow range.
Yes.
How do you think the field position looks at this point in terms of which way it breaks?
Well, you know what we've seen is you've seen these new highs, and we've spoken about this before, about you'll see the new highs, but they're going to be on very lackluster volume. You never see the breakout like David's saying. And I think that we are going to that point where we will eventually see that. Is it the retail money coming in more? I'm not really sure about that, because that theory, you would think that would have already happened already. But I do think that we will see something at some point. I do think we are in the later stages of this bull market. It could be 6 months or a year and a half, but we are at the later stages of it.
All right, gentlemen, thanks, and Holly, everybody, for joining us here this hour.